Welcome to the explainer. The crypto market is sending some seriously mixed signals right now. On one hand, you've got this widespread fear that's just yanking prices around day to day. But then, if you look closer, some traders are placing these massive multi-year bets that point to a totally different future. Today, we're going to decode this clash between the short-term panic and a quiet, long-term revolution that's brewing under the surface.
All right, so here's how we're going to break this down. First, we'll touch on that general market anxiety. Then we'll zoom right in on this wild multi-million-dollar bet that, on the surface, looks like a total doomsday prediction. We'll unpack what's really going on there and then pull the lens back to see the bigger picture, the regulatory battles and the deep structural changes happening right now.
So where's all this anxiety coming from? Well, right now, the entire financial world, not just crypto, is basically holding its breath for one thing: the next Federal Reserve meeting. Any little hint about interest rates sends these huge shockwaves through the market, and crypto is standing right in the middle of it all. It's just a perfect recipe for volatility.
And all that nervousness, it translates directly into these crazy price swings. We actually see these spikes in volatility happen like clockwork. They often kick off right when the US trading session opens up. It's that moment when a ton of volume just hits the market all at once, and it just amplifies any jitters that are already there. You can practically see the market's heartbeat right here on this chart. It's calm 1 second, and then boom, this massive spike of anxiety. But here's the real twist. While most of the market is glued to these daily freakouts, a few big players are just ignoring the noise and making some absolutely wild bets on the long-term future. All right, let's get to the most eye-popping piece of data we've seen. It's a massive bet that, at first glance, looks like someone is predicting a total catastrophic collapse. It's a real head-turner for sure. And this brings up the obvious question, right? With all this uncertainty swirling around, are the big, smart money players really setting up for a devastating multi-year crash for Bitcoin? So here it is, the number that has everyone talking, $20,000. A huge amount of money is sitting in what are called put options, with a strike price, that's the target, of just $20,000. And get this, these aren't short-term bets. They don't even expire until June of 2026. Okay, so what exactly is a put option? Well, in simple terms, it's a financial bet that pays off big if the price of something falls below a certain level by a certain date. You can think of it like buying insurance against a price drop, or just making a straight-up bet that the price is headed way, way down. And we are not talking about pocket change here. The open interest, which is basically the total value of all these active bets, is over $191 million. That is a massive pile of cash that seems to be betting on a $20,000 Bitcoin. But is that what's really happening here? This is where the story gets way more complex and, honestly, a lot more interesting. See, this isn't just a simple one-sided bet that the market's going to crash. There is a whole other side to this story. Because check this out. For all those doomsday put options, there's also a ton of activity in call options, which are bets that the price will go up. And these aren't small bets either. We're talking about targets over $200,000. So you've got these huge wagers on a catastrophic crash and an explosive rally, all at the same time. What gives?
Well, it turns out this isn't really about predicting a specific price at all. It's about betting that something huge, something dramatic is going to happen. It's like buying a bunch of cheap lottery tickets for a massive explosion in price. The traders don't really care which way it goes, up or down, as long as it goes big.
So why would anyone bet on that kind of chaos? What could possibly cause such an insane price swing? Well, a huge part of the answer lies in the intense regulatory battle that's happening right now, especially in the United States. The outcome of this fight could literally send the market flying in either direction.
On one side of the fight, you have some serious headwinds pushing against the industry. There's a major bill that could bring a lot of much-needed clarity for crypto companies, but it's stalled, and that just creates more nervousness and uncertainty about what the rules of the road are going to be. But then, on the other hand, you have these incredibly powerful tailwinds. The CFTC is actually looking at a pilot program to use Bitcoin and Ethereum as collateral. At the same time, other regulators are pushing back hard against debanking. That's when banks just refuse to work with crypto companies for no good reason.
And this quote from a US regulator, wow, it really says it all. This shows you there's a real recognition at the highest levels that crypto is here to stay. The message is pretty clear. The old financial system needs to adapt to this new tech, not the other way around.
Okay, so let's tie all of this together. Because here's the thing. Despite all the chaotic price moves and the political drama, the real work of integrating crypto into the traditional financial system, well, that's just quietly and steadily moving forward.
I mean, every single day, we're seeing these new structural building blocks being laid. You've got giants like BlackRock pushing deeper and deeper into the space, building products for everyday investors. And at the same time, regulators are building out the essential plumbing, the frameworks and rules for fair access that let crypto connect safely with the rest of the financial world. And this really gets us to the core conflict, the central tension in crypto today. The daily price action is all being driven by fear and uncertainty, things like Fed meetings and political delays. But the long-term trend, the one that's playing out over years, not days, shows this clear, undeniable path of development and deep integration.
And so, this leaves us with the one big, provocative question. As these two powerful forces, the short-term fear and the long-term evolution, keep pulling in opposite directions, the defining question for this entire asset class is just which one is going to win. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.